How's it going, guys? The market, is it going to crash based on irresponsible behavior from Citadel? Maybe. And if you are concerned about that idea, it's time to cover it in detail. So we have pretty charts, we have important DD done historically, and we have a comprehensive overview of exactly what you should be worried about if you trade in the market. Doesn't matter if you don't trade GME, doesn't matter if you don't trade AMC. This is risky business akin to the 2008 financial crisis that Citadel is currently undertaking. And if that is something that you want to learn more about, stick to the end of the video to find out, as well as slamming that subscribe button. We're on our way to 75,000 subscribers, just 300 away to 73. I really do appreciate you guys pitching in, and of course hitting that like button so that more Moon Platoon Space Apes find out about this video, and onward we go. Too long didn't read. Citadel is naked shorting ETFs, operational shorting, containing GME to drive down the price. And in the first drop in February, they shorted XRT, and in the next week, they have shorted the entire Russell 2000, IWM. Read the whole thing to learn why this is irresponsible action that may lead to the crash of the entire market. Thank you, Clarkish, for the super. I'll cover it in just a sec. And thank you, JM, for the super earlier. Anatomy of an ETF short attack in Feb. Let's check it out. So this is a cute little tableau chart for 1, price, 2, failed to delivers and FTDs, right? And 3, GME volume. And once again, volume should track price. We have the exact same x-axis here, right? Starts in January, goes all the way to the end of February. And now we are looking at how an ETF short attack works. So right here, we have in blue XRT and in orange GME. So that's an important distinction here. We are noticing that for the price of XRT staying completely consistent, we see the major spikes in January. This is the original January gamma squeeze. And the next thing you'll note is that in the 28th, first short attack that drove GME from 480 to 120, that was that bimodal dip that we saw here. And then February 1 to the 3rd, GME price falls with very low volume due to operational shorting of XRT and other ETFs that contain GME. FTDs are a risk and a cost that comes with short attacks, right? You ultimately try and take a bunch of shorts from the ether and make it seem like a lot of people are selling. Unfortunately, that is not going to be a sustainable process, and it causes a ton of FTDs. It's just a carbon trace, a receipt trail for exactly what happened here. So this is unarguable. You put this in front of the SEC and say, look at this shenanigan. This is super illegal, right? This is just not supposed to happen. And SEC, we already covered, may already be opening up their criminal investigation books to cover exactly this. On January 26th in 2021, spike in FTD of GME due to gamma squeeze, right? This is just shorting the stock overall. And then XRT kicks in and tags team. That's just like the Rudos or the bad people in the pro wrestling. They come in, they tag team, they say, okay, you got shorted, don't worry, now I'm gonna get shorted. January 29th, spike in FTDs to abnormal levels, which is correlated with heightened operational shorting of XRT. So orange first, then blue. All right, mainly take a note here in January 28th, FTDs drastically reduced for GME, suggesting APs have moved away from shorting GME directly to shorting GME indirectly through ETFs. We covered this in February. This is one of my very first videos about XRT and how they were just used to short GME without actually shorting GME and gathering too much suspicion onto themselves. February 1st to the 3rd, right? GME volume detached from rapid fall in price. This is the volume here. It is essentially the consistent amount here, but it does not affect the price as it continues to stay constantly low. This is where it was staying around 40 to 60 bucks, and where you and possibly, it's where I and possibly you held all throughout February. We also want to be able to make sure that there is proof of naked shorting, since they are required to buy back naked ETF shorts today, driving up the price. Here is that diagram here. So we have the x-axis. This is Webull. If you guys don't have 2 free stocks from Webull just yet, this is the same exact setup that I'm using right above me. I have GME up here. I have AMC up there. I can even teach you exactly how to set up your indicators and signals like a data scientist. So if you guys have not yet clicked that link, press it and get 2 free stocks, as well as this tool entirely free. Operational shorting on the IWM Russell 2000 begins, right? This is just from a week ago. Signs of massive sell volume, RSI dipping below 30. In fact, I said a week ago, but I think it's actually, no, yeah, March 18th. That's a week ago. New SEC rule in 2017 says FTDs must be reported by T+2, but market makers have T+6 to deliver on shares sold short. It's kind of like a homework extension for market makers specifically. Citadel buys back shares naked shorts. They sold operational shorting before T+6, causing spike in IWM and GME price. So that small little spike right there, all the way up to 212, is when Citadel had to cover those naked shorts at T+6. So this is proof of naked shorting right here. So we know that they do, we know what an ETF short attack looks like. We know that they are naked shorting the stock and the ETFs. So class is in session now that you have that context. Have you wondered recently, with reported short interest of GME so low, 26% of float according to Market Beat, how has GME gone down more than 50% in the past 5 days with relatively low volume? Well, are fellow apes and long whales selling? Answer is no. Look at the OBV. That's why we always, right above my head, have the OBV. It's this gray line right here for GME. And if I pull this down, you'll also see it for AMC. Are Citadel and friends shorting GME directly? Yes, but that alone is not enough to drive down GME price drastically without significant increase in reported short interest. Are Citadel and friends hiding short interest through OTC, dark pools, and other shady options mechanisms? Likely yes, but we'll not explore in this post. We covered this in a video just from a couple of days ago. There is some distinctions, such as the fact that that data that we were looking at for OTC is not considered a dark pool. So keep that in mind, and we will circle back to that, not covered in this video. Are Citadel and friends shorting ETFs directly that contain GME? Yes, but that is not the entire picture. Isn't shorting an ETF that contains 1 to 5% GME expensive and cost prohibitive? No, and here's why. Operational shorting, naked shorting ETFs at a profit for Citadel. So this is not only a sneaky, despicable, and downright terrible practice, it also can make you a good amount of change. What is an ETF? An exchange traded fund. An ETF is a basket of stocks, like I've said before, a fruit basket, that can be purchased or sold on an exchange like a single regular stock. Let's say you don't know what fruit you like, or you don't know what fruit your friends will like, so you buy them a fruit basket so that they have a little bit of everything. This is the same thing about taking risk on a market based on either an industry or based around a similar type of stock or based on around someone's specific investing style. An ETF helps us make better decisions by distributing the risk across multiple stocks. Rise of ETFs are concerning since they constitute a disproportionately high amount of US trading volume. 25% of all US equity trading volume, but only constitute 5% of the market cap. Why is there such a high ETF trading volume? Answer, it's profitable for the APs. An authorized participant is an organization that has the right to create and redeem shares of an exchange-traded ETF, like big banks or market makers like Citadel. How does Citadel make money selling and buying ETFs? Finally, we're here. Arbitrage. The buying and selling of securities in different markets or forms in order to take advantage of differing prices of the same asset. And this we've talked about before in the past too. Let's say that they buy a put and sell a call, right? These are different kinds of options. The only thing you need to understand now is that maybe when they buy the put, it only costs them $45 a share for every share of GME. Every single contract has 100 shares, so they cost them $4,500. However, when they sell a call, maybe to you, because you love GME, you want to take a call option to help out with the gamma squeeze, they actually might be charging you $50 as a premium, and there right away is the arbitrage. $4,500 to buy that same put, $5,000 for you to buy that call. They make $500 immediately based on arbitrage. There we go. Arbitrage analogy. Think of ETFs as like XRT, like a fruit basket. Oh, look, that's my analogy. And stocks, they contain fruits. Say the XRT fruit baskets were $6 and contained a banana. orange, and an apple. Individual bananas are $1, oranges are $2, apples are $3. The total cost of buying the fruits individually is the net asset value, which is this case is also $6. It's the fruit basket cost. Citadel can make their fruit baskets by buying individual fruits, but they wouldn't make too much money since the price of the fruit basket is usually similar to the net asset value. In recent years, Citadel and other APs have found a much more profitable strategy: operational shorting. Operational shorting analogy. So what is that? Citadel has the ability to naked sell non-existent fruit baskets, XRT, IWM, but at $6, right? This is the same as selling non-existent shorts at the same time. You can try and borrow a sell from the future, borrow someone else's share so that you can sell it. However, you're going to have to cover it eventually. Now, what if I told you that you can sell someone's share and that doesn't belong to anyone yet? Well, you can't. That's a counterfeit short or a naked short. This is now a naked operational short here. Flooding the market with tons of promised fruit baskets can drive down the price of individual fruits, only to buy back individual fruits 6 days later at a cheaper net asset value and deliver those fruit baskets to you. That fruit basket was delivered to buyers only cost Citadel, less money, right? Because every single fruit went down in value. $5 to make, netting them a cool $1, while also driving the price of bananas down by 50%. So it's bonus here. They win, and they win based on this terrible strategy. By terrible, I mean evil. Operational shorting by Citadel. When faced with excess buying pressure for ETF shares, the AP market maker can sell shares naked and then locate or create the shares at a later time up to T+6 for bona fide market making. Market makers, often commercial banks or hedge funds, create ETFs for their issuers by buying the securities that the funds are supposed to represent, but they've discovered that they can make a predictable return by delaying the purchases and selling you non-existent exchange-traded fund shares that they will create later. These transactions are a form of shorting. Operational shorting, as coined by Richard Evans, professor of the Darden School of Business. So what does this mean for GME? Finally, we have covered the big gambit of what to understand from the ape point of view: fruit baskets, operational shorting, authorized participants. We have now finally figured out what does this mean for GME? Well, Citadel is willing to naked short any ETF containing GME, and by extension the entire market, we'll show later, to drive down the price of GME. If Citadel shorted ETFs to drive down GME price, why did it go up today? SEC rules that Citadel must deliver on naked ETF shorts T+6, and that is today, right? Because this lines up with this restriction from the first time the IWM was shorted on March 18th. Should operational shorting make apes scared? Operational shorting has no predictive value on the price of the underlying assets 1 week later, unless apes scared and paper hand. Looking at you, scissors in the chat. Citadel must buy back the underlying stock on ETFs sold short, which means if they don't paper hand, they might have to buy back GME at a higher price than when they started shorting. This is very much like a terrible, evil situation here, where they say, hey, I'm going to make some money by pretending like bananas are bad now, right? Bananas are bad for you. I'm selling all these bananas. It doesn't matter how they make it seem like that, but when the bananas go down in price and they have to, then they borrow all these bananas to sell, they can just buy it back at a price that is lower, guaranteeing that they make money unless you guys stay resilient and stay strong. That's why a lot of times people say buy and hodl. I'm not here to give you financial advice, but that is one of the best ways to be able to resist this temptation that the price goes down because the stock must not be doing well. No, this instead is what's happening. Findings from Evans' paper on ETF short interest and failure to deliver, naked short selling or operational shorting. If higher levels of FTD spill over from one ETF to another within the same AP or across different APs with overlap in their ETF market making activities, operational shorting could increase financial instability. When we examine the impact of FTDs across different ETFs, we find evidence consistent with this contagion-like effect. Moreover, we find that APs are closer to their maximum regulatory leverage limit and are more likely to operationally short. These results suggest ETF trading relies on an interconnected network of liquidity providers, which at times pursue positively correlated trading strategies that can be detrimental to the overall market. Additional findings on the operation of shorting and financial linkages are here, but here is the message here. Citadel and friends are on the brink. Uptick in recent ETF naked shorting signals that they are closer to the regulatory leverage limits, which means they're running out of time, money, and the skill that we have. They are getting outskilled. But expect more naked shorting of ETFs, but these additional shorts might lead to entire market instability, right? They will hold their bananas to the moon. So hope you guys learned a little bit of something. Sleepy Meatball over there indicates that maybe some of this was a little bit too technical. Hopefully we didn't get too technical in this video, but if we did, drop a comment down below of any questions you still have. Drop a comment about how today you are feeling, how you're going to spend your attendees, because I'm always curious about what you're going to do when we get to the moon. And thank all of these amazing people, the Moon Platoon, the Meatball Space Legend tiers, and the Gorillionaire tiers for making this show possible. If you guys haven't quite yet, check out the link down below that gets you $250 of free Bitcoin, the BlockFi link down below. It's what I use to keep all of my attendees safe, and it's a good way to live off of interest, 8.6% interest, and that's a dream for everyone. Just sit back and let your money accrue. For now, but not for forever, I'll see you in the money.